that magazine ad? The silver 911 parked outside some mansion, sunset gleaming off the hood, and you told yourself, someday. Maybe you were 16 flipping through Car and Driver. Maybe 25, grinding through your first real job. That Porsche wasn't just a car. It was a promise you made to yourself when you finally made it. That promise just broke. One of the most legendary car brands on the planet just posted numbers that signal the end of an era. Porsche's operating profits collapsed by 99% in 2025. Did your 30-year plan just vanish? Because the company you spent decades dreaming about, the brand that represented making it in America, just fundamentally changed forever. Remember when you were a kid in the 80s or 90s and seeing a Porsche 911 meant someone had really succeeded? Gas was 80 cents a gallon, and that Porsche represented the American dream. Work hard, build your career, and maybe one day you could afford that ultimate driving machine. For many of you watching this, Porsche was the reward you promised yourself when you finally made it. Here's what just happened to that dream. The company delivered 212,509 vehicles in the first 9 months of 2025, down 6% from last year. You might think that sounds manageable. It's not, because while deliveries dropped slightly, profits essentially vanished. Porsche generated just 40 million euros in operating profit during those 9 months. Last year, same period, they made 4.04 billion euros. Let that sink in. The Porsche that defined automotive excellence for your entire adult life just ceased to function as a profitable business. Think about what that means. Porsche delivered over 200,000 cars and barely made any money doing it. They're selling vehicles that cost $80,000 to $100,000, even $200,000. And somehow not making a profit. The business model that worked for decades, the one you watched succeed while you climbed the ladder, suddenly stopped working all at once. The third quarter was even worse. Porsche posted a loss of 966 million euros in just 3 months. Wall Street analysts expected losses around 611 million euros. Porsche blew past those terrible expectations and kept falling. This is a crisis that nobody has a blueprint to fix. Porsche is dying. Did you save for nothing? Here's what killed it. China ghosted. Deliveries in China crashed 26% to only 32,195 vehicles. 3 years ago, China was buying twice that many Porsches. The Chinese market that drove global luxury growth for the past 15 years just evaporated for Western premium brands. You probably remember when China was the hot growth story, when every analyst said you had to be in China to succeed. Porsche went all in on that strategy. Now they're paying the price. EVs flopped. You've probably noticed every car company pushing electric hard. Porsche committed to having 80% of their sales be electric by 2030. Electrification reached 35.2% of deliveries in 2025. That's nowhere close to the trajectory needed. The math doesn't work. Consumers, especially American consumers who actually want to buy Porsches, aren't buying electric vehicles as fast as manufacturers hoped. Tariffs crushed them. Starting in August 2025, the United States imposed 15% tariffs on imported cars. If you were thinking about buying a Porsche this year, you probably noticed prices went up significantly. That wasn't corporate greed. That was Porsche trying to survive. Back home in Germany, deliveries fell 16% to 22,492 units. New European Union cybersecurity regulations limited which combustion engine models Porsche could even sell. The regulatory maze in Europe keeps getting more complicated, forcing automakers to navigate rules that seem designed to kill the traditional car business entirely. But here's the one piece of good news in this disaster. The United States actually grew 5% to 64,446 deliveries. Americans, especially successful Americans in their 40s and 50s, still want their Porsches. You worked your whole career for this. You're not letting some economic downturn stop you from getting the car you always wanted. So here's my question. Are you still pulling the trigger? The US market became Porsche's lifeline. While the rest of the world pulled back, American buyers stayed loyal. That says something about this country and about the people who still believe in rewarding themselves for decades of hard work. If you're still buying, hit that like button, because you might be the only thing keeping this brand alive. The financial destruction goes way beyond just selling fewer cars. Group sales revenue dropped 6% to 26.86 billion euros. The return on sales, which measures how much profit you make per dollar of revenue, collapsed from 14.1% to 0.2%. In the car business, healthy premium brands run 8 to 12% returns. Porsche hit essentially zero. For perspective, if you run a successful small business, you know that profit margins matter more than gross revenue. Porsche kept the revenue relatively stable, but lost all the profit. That's like your business bringing in the same sales as last year, but suddenly all your costs exploded, so you take home nothing. That's what happened to Porsche. They also took 2.7 billion euros in extraordinary expenses. These one-time costs came from scrapping their in-house battery production plans and reshuffling their entire product strategy. That's billions spent on plans that never worked out. They bet big on building their own electric car batteries and lost spectacularly. Look at what happened to the individual models you probably know well. The Macan, their compact SUV, actually grew 18% to 64,783 deliveries. The electric version drove that growth, with 56% of Macans being electrified. This proves that American buyers will choose electric Porsches when the product is right. The Cayenne, that larger SUV that Porsche purists hated when it launched in 2002, dropped 22% to 60,656 units. You might remember the controversy when Porsche announced an SUV. Die-hard fans said it would ruin the brand. Instead, it saved the company and funded the sports car for 2 decades. Now, even the Cayenne is struggling. The Taycan, Porsche's first pure electric car from 2019, fell 10% to just 12,641 deliveries. Even the legendary 911, the car that's been basically the same since 1964, slipped 5% to 37,806 units. If you grew up in the 1980s, the 911 was perfect then. If you grew up in the 2000s, it was still perfect. That consistency defined the brand. Now, even the 911 can't escape the downturn. The 718 Boxster and Cayman got hammered with a 15% decline to 15,380 vehicles. Porsche is phasing out gas versions due to EU regulations. These were the entry-level Porsches, the cars that let younger enthusiasts get into the brand. Now they're being forced electric whether buyers want that or not. Remember thumbing through that magazine when you couldn't even afford the insurance? Now you can afford the car, but the car you wanted doesn't exist anymore. If you were thinking about buying a Porsche this year, you faced a perfect storm. Higher prices from tariffs, fewer combustion options from regulations, and a company in full crisis mode. As an American buyer, you're now paying for trade policy decisions that have nothing to do with the car's actual value. The elephant in the room is electric vehicles. If you're in your 40s or 50s, you've seen enough business fads to know when something doesn't add up. That 80% electric target by 2030 now looks absurdly optimistic. You probably have friends who bought electric cars and either love them or complain constantly about charging. That's the problem. Infrastructure remains inconsistent. Charging takes too long, and the premium for electric technology keeps many buyers in gas cars. Porsche got caught between regulatory pressure demanding electric and market reality showing buyers want combustion engines. In mid-2025, Porsche announced a massive strategic reversal. They're no longer going all in on electric. Instead, they'll offer combustion engines, plug-in hybrids, and pure electrics into the 2030s. This represents abandoning their entire electrification strategy from just a few years ago. If you followed Porsche's messaging from 2020 to 2023, they were absolutely certain about going electric. They talked about it constantly. Now, they've completely reversed course. The decision to scrap in-house battery production cost 3.1 billion euros total when combined with other changes. Porsche decided making their own batteries made no financial sense. Cost-cutting became inevitable. Porsche announced approximately 1,900 permanent job reductions, plus 2,000 temporary positions being eliminated. That's almost 4,000 people losing their jobs at a company that prided itself on German engineering excellence and job security. For a premium brand, mass layoffs signal serious trouble. If you work in corporate America, you know what layoffs mean. They're not done casually. Companies cut people when survival is at stake. Porsche reached that point. The push-to-pass efficiency program aims to streamline everything and cut waste wherever possible. In China, Porsche is slashing its dealer network from 150 locations down to 100 by 2027. Fewer dealers means lower costs, but also less presence in the world's biggest car market. When you're retreating from markets, you're not growing, you're surviving. Leadership changes are coming too. Oliver Blume currently runs both Porsche and parent company Volkswagen Group. Michael Leiters replaces him as Porsche CEO in 2026. Leiters comes from McLaren and previously worked at Ferrari. New leadership might bring fresh ideas, but they're inheriting a disaster. The dividend situation matters if you invested in Porsche during their 2022 IPO. The company paid out 2.31 euros per share for 2024. The 2025 dividend will be dramatically lower. Shareholders who bought expecting steady returns from a stable luxury brand now own stock in a company fighting for survival. Compare this to other luxury brands you might have considered. Mercedes-Benz saw profits cut in half during 2025 with similar tariff and electric vehicle problems. Ferrari, though, maintained strong margins despite selling far fewer cars, only around 14,000 annually. Ultra exclusivity protects Ferrari in ways that higher volume luxury brands can't replicate. You might have cross-shopped Porsche against these brands when considering your dream car purchase. Ferrari was always out of reach for most successful professionals. Mercedes felt more like a luxury sedan than a sports car. Porsche hit that sweet spot where a successful career could get you into a genuine performance vehicle. That sweet spot is disappearing. Tesla grew sales volumes but fought price wars that killed margins. If you're old enough to remember the 1990s Japanese import price wars, this is similar. Lamborghini and Bentley faced China problems, but avoided Porsche's profit catastrophe. The entire luxury performance segment is hurting, but Porsche's exposure proved uniquely severe. What makes this tragic is Porsche's history. If you're in your 40s or older, you grew up with Porsche as the pinnacle. Ferdinand Porsche founded the company in 1931. The Volkswagen Beetle came from Porsche's design work in the 1930s. After World War II, Ferry Porsche launched the 356 sports car in 1948. The legendary 911 arrived in 1964 and barely changed its core formula for 60 years. You could buy a 1964 911 and a 2024 911, and while technology improved dramatically, the basic philosophy remained identical. Rear engine, flat six-cylinder, precise handling, unmistakable design. That consistency across 6 decades represented something rare in modern business. Porsche knew what worked and refused to abandon it. The 2002 Cayenne SUV proved controversial when it launched. Purists said an SUV would destroy the brand's sports car DNA. Instead, it generated massive profits that funded 911 development for 2 decades. The Macan followed in 2014, becoming their best seller. By 2022, Porsche's IPO valued the company at up to 85 billion euros. From 2010 to 2024, deliveries grew from 81,850 units to over 300,000 annually. Revenue climbed from 7.79 billion euros to 40.08 billion euros. If you started your career around 2010, Porsche's entire trajectory matched your career growth. As you moved up, bought a house, built wealth, Porsche grew right alongside you. You were both heading to the same finish line. Then, 2025 destroyed everything. Every trend that drove growth for 15 years reversed simultaneously. Multiple disasters combined into something nobody predicted. Porsche expects 2025 to be the absolute bottom. Management projects full-year sales of 37 to 38 billion euros with a return on sales up to 2%. That's still terrible compared to their history, but at least suggests the freefall might slow. Recovery supposedly comes in 2026. Porsche forecasts high single-digit margins returning next year. New models should drive that recovery. An all-electric Cayenne launches in the fourth quarter of 2025, offered alongside combustion and hybrid versions. This gives buyers choice rather than forcing everyone electric. For 2026, the Macan Electric gets updated versions. A hybrid 911 Targa 4 GTS producing 532 horsepower arrives. If you've been waiting to buy that dream 911, the hybrid version might be your last chance to get something close to the traditional experience. Are you still buying? Drop a comment below, because after 30 years of waiting, you deserve to know if that dream is even worth chasing anymore. Looking at 2027 and 2028, an electric 718 Boxster and Cayman arrive, plus a 3-row SUV and next-generation Taycan. A flagship model above the Cayenne might launch, potentially with a combustion engine initially. Porsche is also pushing synthetic e-fuels to keep combustion engines viable. CFO Jochen Breckner stated they expect 2025 to be the trough before noticeable improvement from 2026 onward. That's the official corporate message. Whether it proves accurate depends on factors mostly outside Porsche's control. Can China's luxury market recover? Will electric vehicle demand finally accelerate? What happens with American trade policy after the next election? The Porsche you dreamed about your entire career, the one you saw in that magazine ad when you couldn't afford to fill the gas tank, the one you promised yourself when you finally made it, that Porsche is gone. Not because the cars got worse, but because the entire business model that supported it just collapsed. The company that perfected sports cars over 60 years is being forced to compromise everything that made it special. They're offering electric powertrains that enthusiasts don't want, while regulators ban the combustion engines that defined the brand. Porsche spent decades being Porsche, and now they're being forced to become something else entirely. That's why it will never be the same. And that's why you need to decide right now. Are you still pulling the trigger, or did you spend 30 years chasing something that doesn't exist anymore?